So far this year, we've seen a bunch of events that have spooked markets a little bit. We had the VIX scare in Feb. We had Italian government bonds having big moves, and then some EM countries as well, Turkey and Argentina. So the way we look at those is, while the initial catalyst for those things happening was idiosyncratic in some way, either it was a political event or some kind of economic event, the way that markets reacted and the knock-on effects, we don't really see those as being idiosyncratic. We see a common theme that links them all together, and that common theme is basically that central banks, in aggregate, as a group, led by the Federal Reserve in the US, are reducing support for financial asset prices. They're doing that by raising rates, but also by shrinking their balance sheets. So for a long time now, they have been the biggest buyers of financial assets, mostly bonds, but equities to some extent as well. That support is now starting to reduce. That is leading to reduced liquidity in many of these markets. That in turn is triggering higher volatility across these markets. So we see that as very much a systemic change that financial markets are experiencing. And those events of the year to date are just a little taste. We expect much more of that to come going forward. With the new Fed chairman, all indications so far seem to suggest that he and the Fed more broadly are not really fazed at the moment by this increase in volatility. So what we're seeing in EM markets, what we're seeing as a result of the trade rhetoric that's going on, they don't really seem to be fazed by that. They seem to be very confident in the path of the US economy. They seem to be very confident in that growth is strong, unemployment's heading the right way, that inflation is slowly starting to pick up in the way they want it to, and therefore they're not likely to be dissuaded from raising rates anytime soon. So ironically, it might be the fact that because the economy is so strong, that keeps them on the path that they're intending on, which in turn makes these kinds of risk factors that we're talking about around liquidity withdrawal, rising volatility, actually even greater.